It. So, yo, what is up for y'all on the YouTube replay? I hope you're having a great day because I am, because my portfolio is at an all-time high today. Specifically, one of our accounts. Let me give you a quick portfolio update. Our buy and hold portfolio is going crazy today. We're at a new all-time high, up 2.18%. And then our main Robinhood portfolio, this is our main taxable account. This account is up 1% on the day. That might be an all-time high, actually. I think we're at pretty close to an all-time high in this portfolio, mainly thanks to CEG, Constellation Energy. This is that nuclear stock I've been talking about. They're the largest pure-play nuclear reactor company. They own the most amount of publicly traded nuclear reactors out of any other stock. By far, there's not even like a close second. But yeah, our main account is up 1% today. And congrats to anyone who owns InnoData, ticker symbol INOD. That is now my largest holding here in my Roth IRA. And they're up 10% on the day. We're up 77% on our shares. Legit, all these gains came from this week. This stock in just 1 week is up 56%. This is a pretty cool growth company, InnoData. I'm actually going to start the stream by going over them right after I go over this portfolio. This is where the real winner is. Ticker symbol FIX. Comfort Systems is up a whopping 7% today to a new all-time high as we speak. So this is the real reason my portfolio is at an all-time high. If I go to year-to-date, they've led to all the year-to-date gains. We are now up 53% year-to-date. Legit, just thanks to FIX stock up here, our main holding. Oh, and also Amphenol Group, ticker symbol APH. This stock is also at an all-time high. They had a huge rally yesterday. This is the company that supplies NVIDIA with their copper cables. NVIDIA has this new NVLink spine product that uses 2 miles of copper cables in this small little box, and Amphenol Group is supplying most of those, which is pretty cool. They've just seen a lot of growth. They're a serial acquirer. They acquire so many companies. They're great. Amazon's down a bit today, though, but let me go over this stock first. This is ticker symbol INOD. This is the company that is up 10% today, and we're up 76% on this stock. I definitely wouldn't buy this one at this price, but let me tell you what I love about this stock. I mean, they deserve to be doing this good. There was no specific news either. This is all just like momentum. You'd think like there'd be some sort of news that caused this insane rally. I've never seen like 5 candles look so clean before. Like a week ago, this was 37. Now it's 58 or 59. So pretty crazy. Here's why they deserve it. Because this company, if we look at their price to net income multiple, it's a 45. Dang, legit a week ago, it was like a 30. But here's why they deserve it. This high premium is because they're high growth. If you look at their digital data solutions revenue, it's up. This is all organic. They didn't like acquire a company for this. Dog, this is pre-recorded. Yo, D9, this is not real. Or I mean, this is real. This is not pre-recorded. But what's up, dude? I did see your comment for Domino's Pizza. But check this out. The sales are up 99% year over year after growing 92%. So this business is at a record. The analysts are expecting the revenue just continue to hit a new record, like 71 million in 2 quarters. That'll be a new record. And here's the thing. The sales are up 79% and they're actually profitable. They're making net income every single quarter, which is pretty cool. They've been fortifying their balance sheet. They've been deleveraging as their assets are growing. They're free cash flow positive every quarter as well. So everything about this company is headed in the right direction. Plus 5 of the Magnificent 7 are customers. Meta's a customer. NVIDIA, Google, Amazon, and Microsoft are all customers. So yeah. Let's check it out. Someone said, what up, B-Mills? He says ASTS, and then we can pull up, what's that called? Domino's Pizza stock. Yeah, remind me to look at that one. But here's ASTS Space Mobile. This is one of the space companies, and the next 2 quarters are absolutely crucial for them. Downgrades AST may following Starlink acquisition. Okay, well, anyway, here's the thing you want to watch for ASTS Space Mobile, because right now it is tough to buy, because check this out. This is a basically revenue-less company. They're doing $1 million of sales a quarter. So I just want to warn you of that. This company legit does $1 million of sales a quarter and lost $135 million in net income this quarter. 70 mil last quarter, 50 mil, 300 million. But that's the one thing you want to watch. You know, $13 billion company with no sales. But here's why the next 2 quarters are super crucial. Check this out. They did $1 million of sales this quarter. Analysts are expecting $25 million next quarter. And then after $25 million, they're expecting $33 million. So it'll be very interesting to see what happens the next 2 quarters as they transition from a revenue-less company to finally making some revenue. I just switched to Robinhood for the 2% promo. Yeah, dude, Robinhood is doing some crazy stuff, which is pretty cool. Has anyone seen Robinhood stock? They're actually at an all-time high today. I can't believe it. Check this out, my friends. Robinhood is up to $118. That is a new all-time high on Robinhood. I'm regretting every share I've ever sold to this company, but at least I still have 5 shares left. We're up a crazy 750%. I used to own like 70 shares of them. Jeez. All right. And SoFi as well. I regret every share I've sold to SoFi and some of these other companies. Another company at all-time high today is Reddit. I'm talking about this one for a while. Debt-free, super growthy, ARPU, average revenue per user is growing like crazy. So Reddit deserves to be at an all-time high. There's a high short interest on this company as well. Here's how you tell. There's 21 million shares short, and there's 187 million shares that exist. Actually, not that much. Only like 7%. Wait, Reddit. How many shares are short? Actually, it's better to see on Moomoo because it just tells you. So 11% of all the shares are being shorted on Reddit. So potentially there's a little short squeeze happening. So let's look at Domino's Pizza, DPZ. And then we can pull up Oracle. Yo, Oracle's up 40% on like a 300% surge in new orders. They're building out like 37 new data centers. I mean, it sent up the whole AI ecosystem, like Constellation Energy, the nuclear stocks are up like crazy. But here's DPZ, Domino's Pizza, that pizza company. They have a nice dividend yield. Warren Buffett does own some of this stock, so that's pretty interesting. I want to see the dividend yield really quick. Hey, what up, V? What's good, man? What up, JVM? Good to see y'all. So check out the yield. You get a 1.5% dividend yield, but look at the payout ratio. It's only at 36%. So that's why they're able to grow their dividend every single year. 2021, you got $3.70. Now you get over $6 in dividends a year, which is pretty cool. The stock has been flat for a while, but let me see. How are they growing? How are the sales growth doing? So the sales are only up 4% year over year, low, mid single digit. The net income did fall by 8%. They're making a steady stream of money, super profitable, 180 million in net income a quarter, but the net income did decline, although the sales rose. So that means they're seeing margin pressures. That's actually common for restaurants right now. Starbucks margins are collapsing, Wingstop a little bit, so Chipotle as well. All their margins are falling a bit, so I'm not shocked about this. Domino's Pizza, I do like this one. Warren Buffett is a shareholder too. Hey, Klarna IPO, I think they're later today, or when's their IPO? Oh, they're already out. Wow, so check that out. Klarna is up 20%. This is that buy now, pay later company. Hey, Jay Cleaver, no way, dude. Thanks so much for the 21 roses. Yo, if you got a stock you want me to look at, let me know, Jake. I got you. I really appreciate that. So yeah, Klarna's that buy now, pay later stock, kind of like an Affirm. So let's look at Oracle right here. Oracle's the company that's really sending up the whole ecosystem right now. They're about to get welcomed to the $1 trillion club. They're worth $930 billion. So yeah, their bookings climb 359%, which really beat all analyst expectations by a huge margin. There was a lot of good news here. Let me see their actual earnings. So they missed on revenue, they missed on net income, and they barely beat on EBITDA. So it was like a mixed quarter, but it was the guidance, the future guidance that was really good for this company. Here, the numbers are already out right here. So the sales were up 12% year over year, and the net income did fall, but they're making a steady stream of $3 billion plus in net income every quarter. So, yeah, Oracle, you also get a nice yield here. The yield did fall because they rallied up so much, but a 0.5% yield. I wouldn't chase this one at all-time highs for sure. I wouldn't probably even touch it over $300 a share. But congrats if you own that one before today, man. They are just, that's great news. It's bringing up Comfort Systems as well. Ticker symbol FIX. They're up 6% today to a new all-time high. Same with Amphenol. I think NVIDIA is pretty close to an all-time high as well. If I go to let me go to the mega cap watch list right here. NVIDIA's up 4% today. Oh, really recovering a lot of that post-earnings decline. Apple's down 3%. Apple had a disappointing showcase at their Apple event. It was just like their new iPhone. I think investors were wanting a little more. I don't know. I think that's why Apple's down 3% on a pretty green day. Hey, all right. So let's see. What do you think of RGTI? I'm trying to switch. It's currently 10% of my portfolio. Kind of Kind of unsure when to exit. Yo, RGTI, I don't love this one because it's all momentum right now. They really shouldn't be worth $5 billion. Not financial advice, of course. I'm not an expert, but this stock is just propped up on momentum right now, which is all right. But check this out. Here's why I couldn't pay $5 billion for them. First off, the sales are down 42% year over year, and they're only $1 million. Like you're paying five. I know so many significantly better companies, like fundamentally, than this, like worth way less than $5 billion. So from a financial point of view, like sales are down 42%, a million of revenue. They lost 40 mil in net income. They're losing net income every single quarter. So if you're wondering what happened to their balance sheet, how did they just fortify their balance sheet like this? How did their cash, here, I'll show you this. How did their cash go from legit 200 million to 430 million? Well, I bet if we go to the cash and financing activity, there's going to be a huge green thing, meaning, yep, so they actually diluted the shareholder by $400 million this quarter, or they issued 400 million worth of shares to raise cash. So, which actually is smart of them to be raising cash and diluting the shareholder at these prices because it's ridiculously overvalued at $5 billion. They're kind of like an Oklo. I don't know how they have those market caps. It's pretty crazy. But hey, what up, Steven? He says, have we looked at Nebius yet? We have not. Let's pull it up. So Nebius, let me pull up the NVIDIA ecosystem right here. So NVIDIA owns a bunch of individual stocks, and one of the companies they own is Nebius right here. And again, I never suggest you buy a stock just because NVIDIA owns it. You should always go do your own research on a company. And well, when we go do our own little research on Nebius right here, all I can find are good things, except that they're not profitable yet. They're not making net income, but it's all right because of this revenue growth. I mean, it's insane. The revenue went from 14 million to 100 million in just a year. Like this was legit a revenue-less company in 2023. Sales of 5 million a quarter. Now it's 100 million. And in 2 quarters, the analysts are expecting 263 million. And the stock rallied up so much yesterday. They're actually probably going to make way more than 263 million because they just got, what was it, like $17 billion. Where was the order? They had a partnership with Microsoft. Oh, dude, there's so much news I can't find it. But basically, Microsoft signed $17.5 billion deal with Nebius. So that's really interesting. It's tough to buy at this price. All right, so let's see. All right, hey Nathan, opinions on RXRX? Yo, Romsky. I don't have anything good to say about that stock. So that's another company owned in the NVIDIA portfolio. I think investors like this one because NVIDIA owns it. But if we judge them off their financials, and that's what we really do here, we look at a company based off their financials. We don't really do technical analysis here like charting, but check this out right here. The thing with RXRX is, here's why I can't personally buy this company. The revenue was 20 million, not much, 20 million of revenue. But this is the bad news. They're losing a metric boatload of money. They lost 200 mil, 180 mil. So, and these are devastating losses because they lost nearly $1 billion in the past year, and the whole company is only worth $2 billion. So if they keep up these net income losses, there's real bankruptcy risk at this company. Luckily, they've been able to fortify their balance sheet by issuing shares. So they still have $525 million of cash, probably like 350 million in net cash on hand. So they're good for, at least 2 quarters without having to issue debt or shares, but they're not in a good position. I can see, I can definitely understand why this stock is near that all-time low level. And sadly, I think it might continue to climb down. I'd be very careful with that stock. Yeah. All right, so analyze Meta. Yeah, what up, user23? So let's check it out. Hey, what up, Zachary? Good to see you, man. Yes, sir. Have you seen InnoData? Yeah, dude, hold up. Before we get to Meta right here, I'll show you my position in Meta while we're over here. I do own 5 shares of Meta, by the way. I'm up 43%. It's been a great hold for me. We do get dividends too, not much, $2.63. But yeah, with my most recent share, I bought a share at $6.44 not that long ago, and it's $7.50 today. So pretty cool. So there's my Meta position. But I'll really quickly, I want to show you guys InnoData right here. This is a stock I've been talking about for a while, if you've seen my streams before. But this company is up 56% in just a week. We're now up 77% on this company. I wish I bought more, but at the same time, I can't put a lot of money in these kind of stocks like Robinhood, SoFi, Reddit, all these stocks. I only put like a little bit amount of money in there, like a couple hundred. I don't make a meaningful size positions. But yeah, InnoData has been a great performer. We're up 10% in our Roth IRA the past week. How are we doing year to date? 11% year to date, 12% all time. We literally just started this portfolio almost exactly a year ago, our Roth IRA. So pretty cool. Oh, and year to date, I think we're pretty close. Yeah, I think we're at an all-time high right now. It's a great day to own stocks, I'll tell you that. Mainly thanks to Constellation Energy and Oracle. They're up 8% thanks to them. But yeah, the SPY is up 0.3. But let me get back to Meta. Let me tell you why this is a great never sell stock. And even though I'm up a good chunk on them, I'm not selling a single share. I'm not taking a single dime of profit on Meta because I think this stock is going $800 plus, not financial advice. SoFi, Reddit. Yeah, here, I do own SoFi and Reddit. I'll show you after this if you remind me. But check out the multiple. The PE is just the net income multiple plus any buybacks or dilution. But they're trading at 27 times net income. For a Mag 7 company, Meta, I think they could maybe stretch up to closer to a 30 PE before it maxes out. Send this to like 850. But check this out. Their active users, this is crazy. 3.48 billion daily active users. So pretty much half the world is on one of their apps every single day. And they're beating on all analyst expectations. They're expanding their margins, like the revenue's up 22, the net income is up by 36. So that means they're expanding their net margins. They have 40% net margins for a $2 trillion company, fortress of a balance sheet. They're making so much interest. Yeah, there's Mark Zuck. He owns 14% of all the shares. So Meta's great, man. Yeah, they also have a dividend too, share buybacks. App name. Yeah, hey, by the way, I'm on a brokerage right here where you buy stocks. It's my favorite one. If you want to get this app, it's in the link tree in my bio, the very first link there. Um, yeah. What are your thoughts on Palantir? Hey, what up, chef? So let's do Palantir. So this company is one I'd love to own. Only thing preventing me from buying this one is the high valuation, the high multiple. So, but they deserve a high valuation for sure because they're extremely growthy. Like, check this out. They're trading at 115 times PS, which is price to sales. So like price to revenue. So not price to profits, not price to net income, but the price to revenue is 115. That's really expensive. But here's why they might deserve it. Check out the government revenue. A lot of police stations use Palantir's, software. It's up 49% year over year. That's the highest growth rate. The growth rate's growing. So the revenue's at a new record. And not just the government revenue, but also the commercial side of business with S&P 500 companies like Google and mom and pop shop ice cream shops. Check this out. The revenue's also at a record, 450 million, up 46% year over year. The growth rate, I mean, the growth doesn't stop. It just hits a new record every quarter. They had their first ever $1 billion quarter. So $1 billion of revenue, up 48% year over year. And on that billion, 330 million of it was net income. So that's easy math. 33% net margin. That's incredible. A record margin. And they also have a fortress of a balance sheet. Legit, Palantir has no debt at all. $6 billion of cash, no debt at all. I mean, that's a huge safety net, gives them so much freedom. So, and they're also earning interest on their cash. Pretty cool. Are you worried about the Feds not cutting rates next week? I'm pretty sure they're going to cut rates next week, but but not by 50 basis points, but by 25. That's my guess. Have you seen UNH? What up, Francisco? Let's check it out. Yeah, United Healthcare has seen some nice momentum. Hey, what up, Clem? Good to see you. Ed Music. Hope you're having a great day. So here's United Healthcare. They are down on the day, but that's after an incredible day yesterday. Also, the reason they rallied so much on this day right here, the reason they gapped up is because Warren Buffett bought shares. And this is the day they disclosed that. So Warren Buffett bought a bunch of shares of United Healthcare, 5 million shares. And Warren Buffett doesn't buy a stock unless he really does his due diligence. So it was just seen as a great sign. He likes dividend stocks. With United Healthcare, you get a 2.5% dividend yield. Now, the reason the multiple is low, the historical average is a 25 times net income, but they're trading at 15 times net income right now because the future is a bit uncertain. The net income is expected to drop 50% to $1.70. The $1.70 of EPS won't be able to cover the dividend, but I think it's mostly priced into the stock. But that being said, I wouldn't really touch this one realistically over $300, or I wouldn't buy it meaningfully over $300. So yeah, congrats if you own that one or bought the dip on them. They're having a nice recovery. Oh yeah, Klarna. Yeah, this company just IPO'd, KLAR. So this is that buy now, pay later stock. They're up 17%. What we usually see is with these IPOs recently, as soon as they IPO, they rocket up. How are the sales? So again, they just IPO'd. We don't get much data, but revenue's up 20% year over year. They're probably raising a bunch of funds from this IPO to deleverage. All right, so S. Lopez, what's up, dude? He said, I have 350 shares of APP. This is an incredible stock, and they're at an all-time high today. Yo, congrats if you own this company. This stock just got added into the S&P 500. So Robinhood and AppLovin and EME got added into the S&P 500. And check out AppLovin. They absolutely deserve the hype around them. They deserve a high valuation, and they deserve to be in the S&P 500. Check this out. The sales are up 77%. And guess what? Out of this 1.2 billion of revenue, legit 820 million of it was net income. I can't believe it. They have insane margins. Legit 65% net margins and 90% gross margins. It's insane how they can expand the margin. Like, they already had 40% margins. These were fantastic, but they continue to grow it to a 65. I don't believe it. So they're also not just printing net income, but free cash flow as well. Easily going to be making like close to 4 billion of free cash flow a year, eventually close to a 4 billion in net income a year. But let me do a multiple on that. If they're going to be doing 4 billion, so they are a bit expensive. You're probably going to get, if you buy it today, you'll probably just get like 4 to 6% of your money back a year. But because the earnings yield is like a 2 to 2.5%, the forward earnings yield. I wouldn't buy this one today at all-time highs, but congrats if you own them. I'm not surprised to see them at all-time highs. They're so growthy, like incredible margins. They really don't have any competitor, like one other competitor. So pretty cool. Hey, what up? What up, John? How's it going? So someone said, can you look at ABAT? Let's do it, man. Hey, so American Battery Technology. So this is a very small one. We don't really cover these kind of stocks, but they're only worth $200 million, and the stock hasn't done too well. Let's go analyze their financials, though, because that's what we'll judge them off of. So it looks like they finally have sales, but again, it's under 1 million this quarter. Under 1 million of sales, losing 10, 20 million a quarter. So that's the tough part. They lost over 5% of their entire market cap just in net income just this quarter. So that's probably why the stock is not doing too well. These you're buying an asset that's worth 200 million, and you're buying a business that loses 10, 20, 30, 60 million in net income a year. Hopefully those losses should narrow, but they're very small. Just be very careful with that market cap. I bought Oracle when it was down, up 40%. Oh, dude, nice. All right, so yeah, when will Reddit be added into the S&P 500? That's a great question. I do own Reddit as well. That's actually it's over $1,000 position for me. No way. Reddit's at an all-time high today. My best performing stock in here. So if you're wondering why is Reddit at an all-time high, they're not like AppLovin in terms of what they do, but they're like AppLovin, how they're extremely growthy. Like, you wouldn't expect this for Reddit. The sales are up 77% year over year. So the revenue's up 77 after growing 53. So I don't know how, but Reddit just continues to grow the sales, and not just revenue, but profits. They made 90 million in net income, a record net income quarter. They have an absolute monster of a balance sheet. They legit have no debt at all, no debt on the books, over $2 billion of cash. The free cash flow is just as good, man. So Reddit is a beast. I think they're doing a little short squeeze right now because 11% of all the shares are being short. What's up the most? So yeah, these are my only stock screen in here, these 4 stocks. And yeah, we do have some losers. Futu, Sprouts Farmers Market in here today. Oh, well. All right, so I'm bullish on Lyft. Can you go over it? So Lyft, let's do it. So I think Lyft is finally like they're finally in a spot financially where it's justified to buy them, because before today, they were not doing too well compared to their competitors. Like, they're finally making consistent net income. If we zoom out, they were burning through a couple hundred million every quarter. It was tough buying this company, but now they're on a consistent path to, be net income positive for the rest of the time. So it's now a profitable company. Sales are going double digits. Sales are up 10%. The free cash flow is insanely good. Up 30% year over year. These growth rates look good. So yeah, Lyft, I do like them. I like Uber as well. I think Uber might be the better buy. They have a stake in Grab and some other companies, but Lyft is finally profitable. I'd like them. Can you look at Mercado? Hey, what's the ticker symbol for that one right there? Is Palantir in the S&P 500? It is, James. It is. What up, Jason? Good to see you. If you had 5K to throw into a stock in the next week, what would your top picks be? Yo, that's a tough That is a tough question. I'm actually about to deposit. I love payday. I'm about to have an extra $1,000 to invest, and I'm probably going to dump it all into my Roth IRA, and I'm probably going to buy uh, more John Deere stock. I'll probably just buy two shares of John Deere with the money. I'm down on my position, 0.41%, but I'm buying John Deere for that agriculture commodity inflation that I think is coming. They also just have great products. You have a nice yield as well. It's one of those stocks that won't really outperform the S&P 500 in the long run, but it's a stock that like you just are happy to own to see them slowly kind of go up. But to offset that, I have some other really growthy names in my Roth IRA, like an InnoData right here. That's we're up 76% on them. They're up 10% today. InnoData is having a great day. Uh, five of the Magnificent Seven are customers. All right, let's keep going here for some more stocks. Ooh, I saw Astera Labs. Let's check it out. This company, oh my goodness, up another 6%. They deserve it, man. This stock deserves to be at all-time highs. So Astera Labs, they're a big market cap, 37 billion. If you ever look at a stock and you see them at an all-time high, you can usually look at the financials and it explains why they're at all-time highs. That's why I like looking at the financials so much, because it has such an impact on what the stock does for the future. And check this out. I mean, growing fundamentals usually equal growing stock price. And check out the revenue growth. The sales went from 76 million to 191 million. And out of this 191 million of revenue, they legit made 51 million in net income, the most profitable quarter they've ever had. They have an absolute fortress of a balance sheet. They have no debt at all, over $1 billion of cash. Uh, the free cash flow is also at a record. So Astera Labs is just everything there is headed in the right direction. They're beating on every analyst expectation. Like analysts were expecting 11 cents of EPS. They beat by double, 29 cents of net income per share. I mean, that's insane. So yeah. Um, yeah, hey, try not to spam here. We'll see. SDOT, what's this stock here? SDOT. So yeah, we don't cover these kind of stocks. If you look in the top right, this whole entire company is worth $9 million. So the whole company's worth $9 million and the stock's at all-time low. Unfortunately, we're not going to cover that stock. I do apologize. We just can't cover those kind of stocks. And if I did, my most with certainty, my answer would be don't buy that name. No disrespect, but check this out. Here's ticker symbol VOO. This is the S&P 500 all-time high today. So this is why you want to own the S&P 500. It just returns 7-8% a year, and its top holdings are the top companies by market cap in the U.S. Nvidia, Microsoft, Apple, Amazon, Meta, Broadcom, Google, all companies I'd happily own individually. And I do own a lot of the S&P 500. I got Amazon in here. I have Amphenol Group. I have Google. I have Meta. I have a lot of those names. McDonald's. What was the previous stock? Yo, I don't remember. By the way, if you missed anything, I'm also streaming on YouTube. My YouTube channel is called Nathan Robert, and you can rewind it. It's there forever. So if you miss anything, you can watch it from the beginning. You can replay it. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. That's the best way to support me. Just subscribe to my YouTube channel. TikTok keeps taking down my streams. It's annoying, but yeah, best way to support me, just watch a stream from YouTube. It's called Nathan Robert. By the way, I sell nothing. I have no course, book, Discord, WhatsApp, Telegram. Watch out for people impersonating me. I'll never DM you, follow you. All right. So someone said check out DLO. Let's do it. So this is D-Local, another company at all-time lows. They have a $4 billion market cap. Let's go look at their financials and see if we can figure out why. Oh, and I think the stock we were just looking at was called ALAB, Astera Labs. So the revenue is growing very nicely. Wow, the sales are up 49% year over year, but the net income is actually down. So that's very odd. Is that real? So that actually wasn't real. Okay, so this good news. If we look at the operating profit, it's up 88%. So they actually grew their margins. That's great news. From a operating profit point of view, they had some little one-time adjustment last year, making the net income look like it's down year over year, but it's really not. So that is strange. I wonder why this company's stock is doing so bad. Transaction revenues. Oh, wait, I remember this company. So do beware. This is like an international stock. So look, Brazil is 20% of the revenue. Mexico is 20%. Egypt is 13%. Argentina. So it's some kind of like border transaction revenue kind of company. Yeah, they're interesting. They did actually probably the most, I was going to say they deserve to gap up on this, on earnings, because they did have good earnings, 49% year over year revenue growth. I can see why they went up so much. Hey, what is the ticker symbol for Bitfarms? Try not to spam. I'll try to get to all the stocks. What up, Miami? He said RZLZ wait, RZLZ. I can't find that company, Miami. RZ. Not sure what that one is. What up, Bat Pow? He said HWM. Let's check it out. Oh, this is an aerospace company. Yeah, a lot of the aerospace and defense stocks have been doing incredible. So this company's nearly at an all-time high. It's a $73 billion company. So engine products, fastening systems, engineered structure, forged wheels. How's that business doing? Down a little bit year over year, but the engine products are doing great. These year over year growth rates in the middle are fantastic. Let's see the net income. So sales are up 9%, but the net income is up 50%. Holy smokes, ain't no jokes. That means they have insane pricing power and margin expansion. Look at that. The margin went from 14% to 19 to nearly 20. I can see why the stock is at all-time highs. That is incredible, and that's real as well. That's real margin expansion. So, yeah, you get a nice growing dividend. Look at that. In 2020, the dividend was 2 cents, legit 2 cents. Now it's 26. So they raise their dividend every year at a good rate, especially with this net income numbers going up. Pretty cool. Okay, so ooh, can you do Celestica? What's the ticker symbol? Yeah, if you got a stock you want me to look at, let me know what the ticker symbol and I'll check it out for you. So, ooh, someone said NU stock, I believe. Yeah, this is NU Holdings. This is one of my favorite crypto plays. Wow, is that an all-time high on them? They're super close to an all-time high. They deserve it too. Financials are so good here, but do beware, all their revenue comes from South America, like Brazil. So yeah, check that out. So 93% of all this company's revenue comes from Brazil. But what does this company do? They're actually a crypto bank out of, South America. And that's where people use crypto for transactions because their actual currency down there is not good. It sucks. So they use crypto. That's the market to be in. It's not too popular in America yet, but the revenue is up 28%. Fantastic. And the net income is up 30%. They're making over $2 billion of after-tax net income a year. Incredible. So I really like NU. I can understand why they're at all-time highs. They're a bit of a crypto proxy too. Why is Futu falling? So yeah, Futu, this stock right here, this is a Robinhood competitor. And Robinhood stock just announced some crazy innovative products. So maybe they're going to take market share away from Futu is maybe what they're pricing in. Dang, Robinhood went negative on the day, but they're still at an all-time high. Pretty cool. Okay, CLS. Oh, let's do it. So this is Celestica. Oh, this is that Canadian company. Yeah, they're at an all-time high today. A lot of companies are at an all-time high. So congrats if you own this company. Let's see if they deserve to be at all-time high. So connectivity and cloud solutions. That's a popular industry. Oracle cloud business is booming. So they're up. This business is up 27% after going 37, after going 20. So the revenue just continues to climb up. And yeah, check out the most recent quarter. The orange line is what the analysts were expecting. A huge beat on revenue, a huge insane beat on net income, and a big beat on EBITDA. So it was a triple beat quarter. Yeah, so check that out. The revenue's up 21 and the net income's up 122. They normally are just making 100 mil in net income. They made 200 mil. So I can see why this one's at all-time highs. Wow, look at that chart. I don't think I'd buy this one at all-time highs. What's the net income multiple? 55 times net income, so a bit expensive, but they probably deserve it because they're so growthy and they're beating on expectations from the analysts. I can see you can usually find out why a stock's doing good. You check out the financials. What apps you? Oh yeah, hey, I'm on a brokerage out here where you buy stocks. My favorite one, by the way. If you want to get this app I'm on, it's in the link tree in my bio. Very first link there. Affiliate link. Full disclosure. If you sign up, we'll both get like a little fractional share of Nvidia. But let's see. ONDS stock. I've saw this one a few times. This is OnDas Holdings. Oh, I think this is that like a LiDAR company or like autonomous driving stock. Let me see. Is there any news around this company? They issued 200 million of stock. OnDas Holdings acquires Israeli tech firm Aperio Motion for 12 million. So that's a cool acquisition. They bought a company for $12 million. What are their sales right now? So looks like they just started making revenue, 6 million, but but check this out. They did 6 million in revenue. It's expected to go to 7 and then 10 million. And maybe after that acquisition goes through, the sales will be even more than that. So yeah. So again, the sales are still very tiny. It went from 1 million to 6 million. So that growth is good. They are still losing net income every quarter, but I mean, they look like an interesting momentum play. They really do. I just want to see them grow. Like they're still really. I wouldn't put a significant amount of money in that company. Hey, what up, Casey? He says, did you buy IDCC a month ago? I have not bought IDCC stock, but this is Interdigital. Wow. Yo, should have bought it, man. Check that out. All-time high on this company. Let's see. They're an $8 billion company, and they're still only trading at 21 times net income. That's a pretty fair multiple. Maybe they could even continue to go to all-time highs. Check this out. Wow. I can see where they're at all-time highs. Analysts were expecting 200 mil. They made 300 mil. That's incredible revenue growth and huge net income beat. So not only revenue beat, but net income beat by double and EBITDA beat by double. Everything is growing like crazy. So looks like record net income quarter. And they're trading at 21 times net income. Seems pretty fair. Yeah, I'm going to re-add them to the top of my watch list. I probably would expect them to continue to climb up to all-time highs. Congrats. Hey, yeah, someone said Baba. Let's do it. Hey, Catherine, good to see you. Thanks for showing up to the YouTube stream. Hope you're having a great day. So here's Alibaba. This is an Chinese company. They're like the Chinese Amazon. They're a Chinese e-commerce company, but they're really not so much business to consumer like Amazon is. They're more business to business. So check this out. This is in USD dollars, not in Chinese, but they're making a lot of money. Like if you average it out, pretty much 5 billion of after-tax net income a quarter. So they're making a good chunk of change. What's the multiple? They're trading at 16 times net income. You get a 0.7% yield. Apparently, they reported earnings. The earnings actually missed on expectations, but the reason they rallied is because they're apparently going to make their own NVIDIA chips that are a competitor to NVIDIA that'll fill the gap because NVIDIA can't send their chips to China right now or whatever. So yeah. Oh, yeah. Hey, what up, Bluefy? He said thoughts on Klarna. Yo, I saw the Klarna IPO. They were up like 17% last time I checked. Yeah, hey, look, they're up 17% right now. This is that buy now, pay later company. They legit IPO today. So, yeah, that one's interesting. SNPS. Oh yeah, Synapsys. This company reported earnings. Let's go look at what they did because I haven't actually looked at this stock yet. Let's see if we can figure out what happened here. Oh, and then we'll look at IREN after this. IREN. I love that company. So Synopsys. Let's see what happened here. So they missed on revenue. Ooh, they missed on net income by a good chunk. That's not great. And they missed on EBITDA. So it was a triple miss quarter. And I bet they maybe gave some bad guidance as well. So that kind of explains it. Like analysts were expecting $2.70 of net income per share. Then they made $1.50. So I think that margin collapse spooked investors a bit. That's unfortunate. All right, so let's see. Taiwan's. Oh wait, we got to look at IREN. This is like a CoreWeave competitor. And then I like Nebius, Taiwan Semi. Remind me to look at Nebius and Taiwan Semi. So here's IREN. This is an $8 billion company at all-time highs. So congrats if you own this stock right here. They had a huge beat on analyst expectations, but here's why they deserve to be at all-time highs. Check out the growth. The sales are up from 56 mil to 187 million, over a 3x increase. And on that, they made a bunch of net income. They have fortress balance sheets. So from a financial point of view, everything's headed in the right direction right there. They're like leasing out their data centers capacity or something like that. So, hey, what up, movie? What website is this? Yeah, hey, by the way, this is a brokerage right here we buy stocks on. It's my favorite one. If you want to get this one I'm on, it's in the link tree in my bio, the very first link there. It's an affiliate link, full disclosure, but it's my favorite one. So lowest fee brokerage, so yeah. Oh yeah, and you can now track like all the super investors portfolio, and I keep my idle cash in here because it earns the nice interest. I get like Anyway, we're at an all-time high in this portfolio today as well. This is what's so unbelievable. We're up 53% year to date. And if we go to all-time, it's not going to let me do it. Wait, let's see. All-time, yeah, we're up 125% all-time. So we can really thank ticker symbol FIX right here, Comfort Systems. They're at a new all-time high today. Incredible HVAC business. Powell Industries has been doing pretty decent. And then Amphenol Group as well, ticker symbol APH, new all-time high. This is the company that supplies NVIDIA's copper. The new NVLink spine product from NVIDIA uses 2 miles of copper cables, and Amphenol Group supplies it. They've also just been acquiring so many companies. What happened? Yeah, hey, again, I'm on a brokerage. If you want to get this app I'm on, it's in the link tree in my bio, very first link there. Affiliate link too, so it helped me out. Or you can just go to Google, just a broker called Moomoo, my favorite one. So yeah, let's keep going here. Ooh, yeah. So what's this stock? Oh, yeah. Let's look at Nebius right here. So Nebius stock, that's a company in the NVIDIA portfolio. So as we know, NVIDIA, has to make all their holdings public. And one of their main holdings, and it's been super growthy, is Nebius. I would be careful to buy this one now because the valuation's a bit high, but they deserve this huge rally. They had a huge $17 billion partnership with Microsoft. That's, the number one basically customer to have. So check out the growth here. This is why they deserve also just a high premium. They're super growthy. The sales legit went from 14 mil to 105 million. That's an incredible 7x increase in the sales. They're not making any net income yet, but it's all right because of the growth of the business. The balance sheet looks really nice as well. And check out the revenue growth expectations. Revenue is expected to go from 105 to 270. So sales are expected to keep on climbing up. How do you feel about buying fractional shares? Yeah, hey, I do own some fractional shares. Like, check this out. If I head over here back to my main taxable account, I have like 15.07 shares of McDonald's. So sometimes the other day I was like, hey, actually, here's what happened. I spent $15 at McDonald's and there was like a glitch in the app and it didn't charge me $15. And I still got all the food, and I felt so bad. So I'm like, let me buy $15 in McDonald's stock. I'll make it up by doing that for them. So yeah, Nebius is pretty cool though. Super growthy on the sales, and that huge Microsoft partnership is huge. Oh, Dot said Reddit. Yo, Reddit, congrats if you own this stock. This is not a meme company. This company has incredible financials. So yeah, they're up 8% on the day. I do own Reddit with you. I'm a very happy shareholder. And check out the growth. I mean, this is very unexpected for Reddit. The sales are up 78% year over year after growing 53%. And this is mainly because of their ARPU growth. Their average revenue per user is up 49% year over year. So somehow they're making 49% more money per user than they did a year ago. They're making like $4 a year off every person. Pretty cool. And they're the most profitable they've ever been. They made $90 million in net income. They're going to be making probably 400 to 500 million in net income a year. The EPS is expected to keep on hitting records, 75 cents. That'll be a record. The free cash flow is nuts. They have an absolute monster balance sheet, legit no debt on Reddit. So yeah, I wouldn't buy them here. I'll show you my position in Reddit. Yeah, we're up a crazy 169% on Reddit. We bought this stock down here not that long ago. Well, like 6 months ago, but yeah, they've beat all my expectations. They're a great company to own. We do have some losers in here though, like Sprouts Farmers down today. Dang, I'm down 3% on them now. I might buy some more Sprouts Farmers Market. So yeah, what's a good indicator on a I like looking at the valuation, Nemo. If a company's overvalued or undervalued, you got to look at the PEG ratio, the price to earnings growth ratio. For some businesses, it's okay to have over a 2, some are 3, but yeah, it's like the price to net income plus the growth. So would you take out a loan if it has 0% interest and invest it? Theoretically, I would take out, if I could have a 0% interest, I'd take it out and just put it in AAA bonds, safest bonds out there, and get 3 to 5%. So yeah. All right, so William said, InnoData, yo, this stock has seen some unusual activity, and there's no news. That's the thing. I've been trying to sniff out what's happening here. I'm not seeing any news, but this stock has just been on an absolute monster of a rally the past week here. And I do own this one in my Roth IRA. A lot of the Mag 7, Microsoft, NVIDIA, Meta, they are all customers of InnoD right here. And they're already up a good chunk the past year, 300%. I'm up 73% on my shares, but I wouldn't touch this one over $50. But here's why they deserve to be at this insane price. Like, check out the digital data solutions business. It's 88% of the revenue. It's at a record, up 99% year over year after growing 93%. And it's expected to continue. The revenue was 50 mil this quarter. or let me see. Revenue was 58 million in 2 quarters. It's expected to be 71 million, a new record. They're also net income positive, making net income every single quarter. Fortress of a balance sheet, deleveraging as well. Went from 57 to 34. That's insane. And also they're free cash flow positive every quarter. So the market cap is still pretty tiny on this one. That's why I think there might be more upside. They're only a $1.8 billion company. So yeah, congrats if you own that one. What app is this? Your platform? Yeah. Hey, DC, what's up, man? I'm on a broker right here. It's in the link tree in my bio, the very first link there. It's my favorite one. Lowest fee brokerage, in my opinion, or just from my looking at them. I also have Robinhood and Webull, but these two brokerages, they lack like the tools with this one. Like on this platform, like you don't have to go elsewhere to do research. That's why I love this app. But yeah, I also keep my cash in here. So yeah, if you want to get this app, it's an affiliate link. Full disclosure, we'll both get a little bit of. I'll get a little fractional share of Nvidia. We both will. So I have an affiliate link in the link tree in my bio, very first link. So let's keep going here. What up, Oscar? He says FCFS. Let's check it out. Hey, bro, thoughts on 9024? What up, Timo? Is that a Chinese company? We'll try and check out that ticker symbol. I might not be able to find that one. But here's First Cash. I haven't heard of this company, but they're a $6.5 billion company trading at 22 times net income, and they're at an all-time high pretty much. So congrats if you own this one. Yeah, they're trading at 22 times net income. They're a pawn shop. So US pawn is half the revenue, retail point of sales, Latin America pawn. So pretty interesting. Yeah, the US pawn shops are apparently doing good. It's up 9% after growing 20, after growing 5. How's the net income? Yeah, these net income numbers are very strong. I mean, yeah, hey, Rishi, this app, it's in the link tree in my bio, the very first link there, Rishi. It's a brokerage called Moomoo if you want to get, there you go. So check this out. They're making a lot of net income. Try not to spam there. But they're making a good chunk of net income. It's up 22% year over year. They're actually growing their margins. So look at that. That's actually the best part here. The sales are flat. They're actually down year over year. Sales are down by 0.05, but the profits are up by 21. That means they're expanding their margins, net income's up, or net margins up 22%. That's very impressive. So there's your pawn shop play. Ooh, what up, Hiyats? He said, thoughts on Amazon. Yo, I do own that company, by the way. Yeah, hey, Petrosaur. Here, it's all the apps I'm using. Someone said this on the YouTube stream. I pasted my link tree in the chat there. This should be in the description as well. Yeah, it's in the link tree in my bio, that very first link there, if you want to get this software I'm on. It's a broker. So here's Amazon, though. This company is a never sell stock. Mag 7, Amazon with insane pricing power. So a lot of people know Amazon for like their online stores, all right? It's because online stores, Amazon.com, that's 40% of the revenue. But check this out. Then they have their third-party seller services, and then their AWS. This is the most valuable part of Amazon, their Amazon Web Services. Because it's the highest margin. They're not making much money giving you that first day delivery, same day delivery package for like a 1% to 2% margin. The real margin they're making is in their cloud service provider for small and medium-sized businesses. It's over $100 billion of annual revenue for them, and it's really high margin. It continues to grow. Insane growth driver. Not just the AWS business growing, they're also an advertising player. They own Twitch, Prime Video, the subscription service from Amazon Prime and the Twitch Primes, and then the physical stores. They own 365 Whole Foods, have some grocery stores, and they also have insane pricing power. So check this out. The revenue is up 13%. So revenue's up 13, but the net income is up 34. That means, again, growing their margins. Great news. So I do own this one. I might be biased, but I love this stock right here. And they're a never sell for me. Robotics play, drone play, pretty cool. Comfort System stock, yeah, hey, that stock's at all-time highs. My biggest winner. They're up 5% to an all-time high today. Oracle really sent up the whole AI ecosystem, which is pretty cool. Same with Amphenol Group. Amphenol Group got sent up on that news too. Great news. All right, so you're so well educated. Hey, thank you so much. Yo, thanks for those kind words. I'm actually going to give you a follow. I really appreciate that. So let's see here. MicroStrategy. Let's cover MicroStrategy, and then we can. Oscar Health. Yeah, remind me to look at Oscar Health. So Here's MicroStrategy. This is basically a Bitcoin proxy. And you really look at this company's market cap and trade it off its net asset value of the Bitcoin. Because usually, let me go start with the balance sheet. So if you're wondering what happened, how their assets go from 7 billion to 64 billion, well, that's the Bitcoin that they own. And how did they get this Bitcoin? Well, if we go to the cash and financing activity, if this number is positive, this means either one of two things. Either one, they either issued $6.8 billion worth of debt, or they diluted you by issuing $6.8 billion worth of shares. And that's what this company's been doing, and it's really working. In this quarter was crazy. They diluted you by $20 billion. That was over like 30% of the company at the time. But they issue shares, and then with those shares, they buy, or with the cash they rose from issuing shares, they buy Bitcoin. And then that most of the Bitcoin they have bought, they're up like a good 20, 30% on. So anyway, this growth of the balance sheet has come from them issuing shares in the value of their Bitcoin, and you really just trade them off their net asset value again. So they're kind of a crypto proxy. I would be aware of that. It's kind of just like when Bitcoin goes up 1%, sometimes they're up like 1.5%. All right, what up, Sean? He said ALOX. Let's do it. ALOX. What is? I can't find ALOX, sadly. I did try and look up that stock. So have you checked? Oh, wait, let me look up. Yo, Timo, let me know if you're still in here. I'll look up 9024. I wonder if I can. Cebu Holdings, it's a Japan company. Let me know if you're still in here and I'll check it out. What up, Celerate? Good to see you. So, yeah, we'll pull up Oracle again. They had a huge boost of new orders. Yeah, if you kind of read at the top here, bookings jumped 359% year over year. So, incredible growth there. They gave strong guidance. The actual numbers they reported were bad. Like, if we go to the analyst expectations here, they actually missed on revenue and they missed on net income or EPS. So, but it was the really good guidance. The net income actually fell year over year. But again, crazy bookings. They're going to make, they're basically creating 37 new data centers. That's why NVIDIA's up so much. They're going to be buying a boatload of NVIDIA chips. So they're almost in the $1 trillion club. They're worth $913 billion, up 34% today. Congrats if you owned them before today. Probably wouldn't buy them at this price. Okay, what up? ALXO, let's do it. So, ALX Oncology. So, again, we don't really cover these kind of stocks on here. If you look in the top right, the whole company is worth $63 million. So, that's an extreme, look at the stock chart. They're at an all-time low. Worth $60 million. And the revenue list. So when you go to the revenue, it says zero because they're a revenue list company. Yeah, this is data from 2020. And they're losing 25 mil a quarter. Yo, oh my goodness. So that's why they're at all-time lows. They're basically going bankrupt. That's what they're really pricing in. Like, these net income losses got to come from somewhere. So look what that's doing to their balance sheet. It's just depleting it. So again, they lost 25 million just in the past 3 months. And the whole company is only worth $63 million. So not financial advice. I probably would expect the company to continue to climb to all-time lows. Oh, hey, CK, we'll check out Sprouts Farmers Market after this. But I want to pull up Rich Tech Robotics. I don't love this as a robotics play. Like, if you're looking for a robotics stock to just buy and never sell, one with good patents, a bunch of IP, I really wouldn't buy Rich Tech Robotics. There's money to be made on it as like a short-term momentum trade. They have a basically revenue-less partnership with NVIDIA, but check this out right here. This is a small cap. They're only worth $458 million. So again, there's money to be made because it's all momentum right now, but I wouldn't touch this one as like a buy and as like a long to just buy and never sell. But it's a $500 million company with basically no revenue. They're doing $1 million of revenue a quarter. They're losing net income every quarter. So I would be pretty careful with Rich Tech Robotics. But they are doing one thing which is pretty smart, and that's fortifying their balance sheet by diluting you. Because again, the company does $1 million of revenue a quarter and loses net income every quarter. How did their cash pile just go from 44 mil to 85 million? Well, you can go to the cash and financing activities, and they diluted the shareholder by 51 mil. And that's 10% of the entire shares. Remember, actually, it's less than a $500 million company. They diluted you by over 10%. I'd be very careful with that one. Any rally you see, I think they're just going to dilute, and the share price will go down on any rally. So I'd be super careful with that one, not financial advice. Just if you're looking for a real robotic stock, I'd look at a Symbiotic. SYM, they're a huge warehouse robotics company working with Walmart. They have over 1,500 patents. Amazon as well. They're obviously not a pure play robotics, but it's like a fun little way to get exposure that you get exposure to a bunch of other great businesses as well. It's like an ETF in one. Hey, what up, fiscal flower or follower? No way. Thanks so much for the rose, dude. I really appreciate that. Yeah, for sure. Let's check it out. KRO stock. And by the way, if you ever have a stock you desperately want me to look at, I always read the YouTube chat first. I'm trying to build on my YouTube channel. So, there's not many comments on the YouTube stream. So if you do comment a ticker symbol on my YouTube channel, I'll always see it first and reply to it instantly. Again, I'm streaming on YouTube as well. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. It really means a lot. That's the best way to support me. Just subscribe to my YouTube channel. I sell nothing. I have no course, book, nothing like that. I'll never follow you, DM you. Hey, what up, John? So here's KRO. Thanks again for the rose, fiscal. I appreciate that. So this is a very small one, a $730 million company, and the stock is the same price that it was back in 2008. So the stock is not done too well. Let's go judge them financially and see if we can figure out what happened here. Do they have so they have a dividend, a 3% dividend. They did just cut it, but that's probably the right thing to do. So let's see. So first off, the lifeblood of the company, the revenue is down 1% year over year. So they kind of lost the growth. Revenue's down year over year, down by 1%, and the net income went negative. So is that real? So look at that. Looks like they consistently made a good amount of operating profit. Then it went negative this quarter. So I can see why this one's struggling. It looks like they're missing on analyst expectations. The revenue is expected to decline to oh wow. So I'd be careful with this one. I can understand why they're at all-time low, but it's not the end of the world. If they can recover, because they're a $700 million company, if they can at least make go back to their making 20 to 30 mil a quarter, that's pretty good. So what up, Steven? He said Rocket Lab. Yo, this is my favorite space stock. So Rocket Lab is at pretty close to an all-time high. They deserve it. They just completed their Geost acquisition, which is gonna lead to their growth even more. RJ said, what app is this? Hey, I'm on a brokerage right here. It's in the link tree in my bio, very first link there if you want to get it. But check this out. Rocket Lab, we can see their revenue broken down. 67% comes from their space systems revenue, and it's up 27% year over year after growing 94, after growing 9. It just had a record. The growth is insane. And not just the space systems revenue growing, but also their launch services. That's up 60% year over year, also to a new record. It's never been over 46 million before. And also, they just acquired Geost. That's going to add even more to the sales growth. So I really like the growth of this company. Probably it's my favorite space stock. I like it more than ASTS, Space Mobile. I like it more than Lunar. I still would watch these net income losses. They are losing a bit of money, but the growth of the sales are really good. The revenue is expected to continue to climb up, and they're beating on expectations as well. So Rocket Lab's really cool. They deserve, the momentum around them. All right. So, let's see. RZLV continues to surprise me every day. Resolve AI. Wow, look at that. 11%. Yo, yeah, you've been talking about this one for a while. Yeah, look at that. Congrats if you own this one. They're a $1.5 billion company. They have sales. They don't have sales. For the full year 2024, they only had 100,000 and they lost 170 mil. Not a great balance sheet. A lot more liabilities than assets. So financially, I'm not seeing anything too impressive here. There's no analyst covering this either, so I guess the revenue is supposed to go to 7 million. But congrats if you own this one. Looks like crazy momentum. I'd be careful with that one though. I'd be real careful. Can you check out BE? They've ran up a lot. This is I thought this was Boeing. No, this is Bloom Energy. You're right. They have run up a lot. They're at an all-time high. Yo, it's a great time to own stocks. A lot of companies are at all-time highs. They're up 13% on the day. Let's see, what's the sales doing? So sales are up 19%. That's great. And the net income losses improved by 32%. So that's great news, outpacing the growth of the revenue. So that means they're expanding their margins. And actually, if you average out the 4 quarters here, they are making net income every quarter. And looks like are expected to go back to net income positive. Revenue is expected to continue to climb. So Bloom Energy seems pretty interesting. I wonder why the crazy momentum recently, 13% gain. Probably might be a bit overvalued, but nice. Brother, thoughts on Apple? Let's do Apple, yeah. So Apple, this company just did anyone watch the Apple event? What app is the info this on? Yeah, hey Joel, I'm on a broker right here. If you want to get this app I'm on, it's in the link tree in my bio, the very first link there. My favorite brokerage. So anyway, here it's where you buy stocks. But here's Apple right here. This is a crazy big company. A lot of people are locked in the Apple ecosystem, a $3.4 trillion company. I'm on an Apple iPhone. Um, and yeah, check out their market share. They have a 19% smartphone market share. Legit, half the revenue comes from the iPhone. And then they have this services business. So this is actually the most valuable part of Apple. If you go spend $100 in the App Store, $30 of it goes back to Apple as a royalty, a service royalty. And this is legit huge. So it's nearly 100 billion of annual revenue for them. And it's super high margin, like legit 90% net margin. So then they have the Mac sales, the wearables and accessory, the iPad. And here's also why Apple has been affected by tariffs. Why did Apple drop so much? I think it was the disappointing Apple event news. But check this out. The United States is only 36% of Apple's revenue. For some reason, I always thought it was a lot more than 36%. They also, 25% goes from EU. Then China is 18%. So yeah, Apple's a great one. You just want to buy and never sell them. Also, crazy net income numbers. They're making basically 25 billion in net income a quarter. And if we go down here to the share buybacks, this is the crazy part. They legit spend all their after-tax net income solely buying back their own shares. They're spending over 23 billion in net income a quarter buying back their own stock. And here's what it does for you. The net income is up 9%, but the net income per share is up 12%. Incredible. It's a hardware company. Well, actually, it's both. So you're right. So if we go we can see the different margins of the two different businesses. So yeah, their services gross margin is 75%, but their products, the hardware, is 35. So yeah, Apple, you also get a nice yield too, a 0.5% yield, low payout ratio. They raise the yield. They raise a dividend every year. Apple's having problems, cannot build their own AI. Yeah, that they were considering using Google Gemini for their Siri products. So, also, how's your portfolio doing? Yo, my portfolio is at a new all-time high today. I can't believe it almost. We're up 1.8% at a new all-time high in this portfolio. And in our Robinhood account, our main one here, we did fall a little bit, but we're pretty close to an all-time high, like less than 1% off all-time highs, mainly thanks to CEG. They're up 7.3% on the day. Yeah, but a lot of other stocks are struggling. Dang, URI went negative. Carlisle just went negative. Google just went negative. So everything but CEG is green. So that's the only stock keeping my portfolio afloat today. Pretty interesting. But yeah, this portfolio is booming. Oh, and then I also have this account. I'll be super quick. Yeah, we're down 0.58% all time. We're only up 16% all time in here. I think Reddit is having a great day. Yeah, Reddit is up 7.3% all time high. Pretty crazy. So what up? HUY said Oscar. So this is another kind of Medicare, Medicaid company, competitor kind of to United Healthcare, and they're really taking a lot of market share, but they're still facing the same headwinds. There's a lot of regulatory headwinds around the whole industry. They don't want them having, crazy margins like they have been. But check out the growth. Here's what I like about Oscar so much. Yo, Jumbo, what's the ticker symbol for that stock right there? I don't know what that is. But check out the annual revenue growth. In 2020, the sales for the full year were 590 mil. Now for the full year 2024, it was 9.2 billion. It just continues to grow. I mean, they've 10x the sales. It was nearly 3 billion just this quarter. Bad news is they're still losing net income. They made 200 mil, but then they lost 200 mil. But the growth is very nice of the sales. So yeah, if you got to watch the headwinds around, the Medicare stocks, but yeah, I do like them. That growth is nuts. That's the ticker symbol. Oh, VLGEA. So let's check it out. Okay, thanks. Let's check it out. Thanks, Jumbo. So let's do it. So this is Village Supermarket, a pretty small company. They're worth $550 million. So a really small market cap, but they have a very nice yield, a 2.6% yield, a very safe payout ratio, only 30%. So they even have room to raise the dividend. So yeah, they're in a center store. That's up 3%. The fresh revenue is up 2%. Pharmacy is up 12%. Yeah, their pharmacy business is doing great. That's good. So yeah, the total sales, when we blend all that together, the total revenue is up 3 and the net income is up 24, so they're growing their margins. They're actually making a good amount of net income. I mean, it's still tiny, but the market cap's tiny. They're a $500 million company making, close to 50 million in net income a year. So yeah, what's the net income multiple? Let's see. The PE is a 9. So trading at 9 times net income, that's pretty fair. And you get a nice yield. So yeah, they're like a small grocery store. One grocery store I really like, and I meant to cover this one earlier. If anyone wants me to, let me know. Sprouts Farmers Market, ticker symbol SFM. I do own this one. I got 7 shares in them. Look at how this one's had a nasty little decline the past couple weeks here. Sprouts Farmers Market doesn't pay a dividend, but they have incredible margins for the industry. The revenue's up 17, but net income's up 40. So that means they're expanding their net margin. 6% net margin. Kroger has a 2% margin. APH is the ticket. What's up? Or the ticker symbol. Hey, I do have some APH stock. I do love this company. They're at an all-time high today. I love that. Let me know if you want me to look at it. 664. So do you own any ETF? I do not actually own any ETFs. Why did Oracle rise so much? They reported earnings and had like 350% billings growth, like incredible future sales. They're opening like 37 new data centers. I wouldn't buy them at this price, but I can see why they're doing so well. So here's AMPG. So we don't cover these stocks really, but let's check it out. Accelerate. They're an 80 mil market cap. Let's judge them off their financials, but keep in mind they're a very small company, only worth 80 million. But look at that revenue growth. Actually, that kind of interests me. The sales went from 2 mil to 11 million. They still lost net income. They're losing a mil a quarter. That is a bit significant when they're a $70 million company. The balance sheet's really good, though. Let's see how much cash they got. They have 11 mil of cash. Not too bad. Did they issue shares? So they diluted 20 mil. So they're interesting, actually. They're not, I really want to see them get profitable, but I really like that sudden spike of sales. If they can keep that up, do 11 mil a quarter plus, I mean, that could be worth a lot more than 70 million, especially if they can get profitable. As long as they don't lose more net income than they're currently losing. Hey, what up, Timo? He says, have you heard of LWAY? I actually have not. Lifeway Foods. Wow, look at that one, all-time high. Another very small one. They're like that other grocery store stock we looked at. So another $400 million company at all-time highs. Wait, drinkable kefir other than Pro Bugs. I don't know what that is, but they also sell cheese, cream, and other. All right, so anyway, that seems pretty interesting. How are the sales doing? So the sales are up 9 and net income's up 12. Looks like they're making net income every quarter now, which is great. Really strong balance sheet. Actually, hold the phone. $21 million of cash. So a good chunk of their portfolio is, or their market cap is just their cash on hand. Yeah, hey, that's really interesting. They sell some sort of like product like that. It's like yogurt. Oh, Elway sells yogurt. Okay. That makes sense why they also sell cheese and stuff. Pretty cool. Congrats if you own that one. What up, Zig? He said, what do you think of Barrick? Is that Barrick's Gold? I think that's Barrick Mining. So, yeah, this stock, they're the same prices they were back in 2006, do beware. But check them out the past couple weeks here. This is mainly thanks to the prices of gold. Gold has been going nuts, pretty much at all-time highs. And these are all the mines that they own. These are all gold mines. Let's see, Carlin, that's up 16%. That's up 15. Cortez is up 50. So what are the total sales blended together up? The sales are up 16%. And the net income, what? Dude, they're doing over $1 billion of net income a quarter, up 100% year over year. These are incredible after-tax net income numbers, incredible balance sheet. Cash flows are insane as well. So yeah, I can see why that one's doing so well. If we look at, here's the actual price of gold. It's ticker symbol IAU. And yeah, it's insane. It's really been on a tear the past couple weeks here. So yeah, congrats if you own it. If you got any gold chains, gold jewelry, maybe go hit up the pawn shop and sell it. If you want to trade it for some stocks. You just mix it with milk and it makes itself, it just grows. That's really interesting, Timo. What was that ticker symbol again? LWAY. I'm going to add them to the watch list, actually. Thanks for that. I like finding new companies. So, okay. Klarna IPO. Yeah, the Klarna IPO is pretty crazy. Wait, what is 7309? What's this one? So, oh, this is that Japan company. Okay, let's check it out. So they're an ADR, so you do pay an ADR fee. So, but the stock just reported earnings and declined a bunch. Let's see what their earnings were. So they beat on revenue, but a huge miss on net income. Oh, wait, this is in Japanese, so we're going to convert it to USD and US dollars. Okay, so yeah, let's see the revenue. Oh, yeah, they report in half, so I forgot. It's probably this net income collapse. Look at how they used to make this consistent net income, but for the first half of this year, it's only 27 million. So they have a really good balance sheet, though. That's great. But I think that's why the stock fell so much on earnings. The analysts were not expecting that huge net income loss. That's my guess. So can you look at Loan Depot? Oh yeah, Loan Depot. So this is one of the mortgage stocks right here. So mortgage loans, they're really rallying on the high chance of a interest rate cut this month. Hey, Chloe plus Gucci, thanks so much for the rose there. I really appreciate that. Oh yeah, we're looking at Loan Depot. Hey, thanks. I just saw that. So yeah, Loan Depot, this is one of the mortgage loan stocks. And basically, there's going to be a huge refinancing boom as we go into a lower interest rate environment. And that's really why they're rallying. You look at Loan Depot, you look at like a Mr. Cooper, they're like a competitor to them. Mr. Cooper, bro, they're being acquired by Rocket Mortgage. Yeah, Rocket Mortgage as well, RKT, another beast, it looks very similar to the stock price of Loan Depot. So I do like the mortgage companies. They're really interest rate sensitive though. And going into the lower interest rate environment should be a huge tailwind for their earnings. So pretty interesting. Oh, and another company that's very, very, very interest rate sensitive. What is up, Nemo? He said Open Door. I would not touch this company unless you're trading it because it's all momentum right now. It's really begging for a lower rate environment. What Open Door does is they flip houses. To be honest with you, they're not really great at it. But here's what happened the last time we were in a zero interest rate environment, 2021, 2022. The sales were legit 3 to 5 billion a quarter. Like the sales spiked up 600%, 300%. Incredible revenue. But look what happened the next year as rates hiked up. The sales declined. Look at these year-over-year declines, down 70%, down 69%, under a billion of revenue. So they're super interest rate sensitive, and they're still revenue or profitless. They haven't made a single dollar of net income ever. But the losses are narrowing. They just cut a bunch of staff, and it's narrowed their net income losses, which is good. So yeah, I think that one's super momentum-y, though. I would not pay right now's valuation unless you're just looking to trade it or something. I wouldn't just buy shares and then never sell. How's it going? Coffee, what's up? He said Novo stock. Hey, this is that weight loss company. Or wait, let me know if you're talking about ticker symbol NVO or if we're talking about Novo. It can't be this company. You know what? I'm going to just hope you're talking about Novo Nordisk. So this is that weight loss prescription company. If you've heard of Ozempic, you heard of Wegovy, like Elon Musk is on Ozempic, for example. That's 93% of the whole business. So it's like a pure weight loss stock. 93% of the revenue comes from their diabetes and obesity care products, and they're printing money right now. They're making over $4 billion of after-tax net income a quarter. They're a European company, so you are paying 80 in ADR, but this is in USD. Making over $4 billion of after-tax net income a quarter. Get a very nice yield, a 3.3% dividend yield. But one reason the stock has been falling so much is because they lose their exclusivity for Ozempic in a couple years. So their patent expires in a couple years, and they're seeing some increased competition from like Eli Lilly's Zepbound. I still, for right now, the business is doing great. I think it's all mostly priced in. I mean, the PE is dog cheap for the industry. 13 times net income. Industry averages of 22. So Novo Nordisk, I do like that one. Good, lovely yield as well. What do you think of Zoom? Hey, Zoom is one of my biggest losers. Let me go back over here. So, let's see. So if I go to search by here, yeah, we are down 45% on Zoom. And look at where we bought the stock. Look, each one of these E's represents 3 months. So this has been like 4 years almost since I bought Zoom, man. Yeah, so we're down bad on Zoom, but they're just too cheap to sell. That's the thing. I'll show this. I'll break this down. Check out the market cap. They have no moat, by the way. I wouldn't buy this stock, and I'm looking to sell out of this position. I wouldn't buy this one. But check out the market cap. They're a $25 billion company. Remember that number. The whole company's worth $25 billion, and they have no debt at all and $7.8 billion of cash. So a huge chunk, 25-30% of their market cap is just their cash on hand. And that $7.8 billion of cash is earning them an interest. Oh, it's not going to show it for us. Oh, well, that's all right. They're making a lot of interest on their cash as well. But so 30% of the entire market cap is just their cash. You can do an X cash PE multiple. So it's basically subtract 30% from the PE, and you're left with a company that's printing money. They're making 2 to 400 million of after-tax net income a quarter. Sales are slow growing. Sales are up 4%. Yeah, the sales should just grow single digit. That's why I wouldn't buy this stock. But that's why I would just the huge cash position and the fact that they're making a couple hundred million in net income and free cash flow a quarter. That's why I'm not taking the L on Zoom. I'm gonna just hold my 7 shares for the rest of time probably, or unless things change and I'll take the loss on them. But yep, that's them. Hey, Looney, great to see you too, man. Shout out to the member Looney on the YouTube stream. So Familia said, look at MicroStrategy. So yeah, again, this is a Bitcoin proxy stock. What they've done is pretty incredible. They've basically just been able to dilute shareholders and buy a bunch of Bitcoin with it. So here's how we can tell how much they've been diluting you. It's actually insane. They diluted you by $7 billion of net income this quarter. Or $7 billion. They issued $7 billion of stock this quarter, and they bought Bitcoin with it. So that's how their assets grow every quarter. Went from 8 billion to 25 to 43 to 64. They've just been able to grow their assets because they buy Bitcoin with it, and that Bitcoin has appreciated a good 20 to 30%. So yeah, you're basically just buying them for the Bitcoin value. You look at the market cap based off their net asset value and trade it off their Bitcoin. So yeah. Will this stream stay up for later to watch? Yes, Nemo, Yev. By the way, yeah, if you want to support me, best way to support me is watch the stream on YouTube, subscribe to my YouTube channel. If you missed anything, sometimes I talk too fast, I apologize. The stream stays up forever on my YouTube channel. Again, it's called Nathan Robert. You can just type that into YouTube, Nathan Robert. It means the world if you subscribe. I sell nothing. I have no course book. So, Colin said, what app is this? Yeah, hey, this is where you buy stocks. If you want to get this app, it's in the link tree in my bio, the first link there. So let's keep going here. Thoughts on Starbucks? Yo, Starbucks margins are collapsing right now. I feel bad. They're in a tough environment. So, and there's some technical analysis too, this app is telling me. There is a bearish continuation triangle. Anyway, Starbucks is the exact same stock price that it was back in 2019. So the stock has been flat for 6 years. Here is why. The net income has collapsed on this stock to the point where they couldn't even afford the dividend the past 2 quarters. See, the net income is down 47%. Like we zoom out, they used to make nearly $1 billion in net income a quarter. Now it's half that, or 300 million. Like it's tough. And here's the worst part. Remember this number. They made 558 million of net income this quarter. And they need to, at very least, need to make $700 million in net income just to afford the dividend and just to retain some net income. So yeah, even though they still made net income this quarter, they didn't keep any of it. All of it, over 100% of it got paid out to dividends. So they they really have an unsustainable dividend. They couldn't afford the dividend this quarter. They couldn't afford it last quarter. So that's why I think Starbucks has been flat for 6 years. It's tough. I think McDonald's is probably the better buy. Hope you're doing well, sir. Oh, hey, thanks, Egg Mayo Sandwich. I really appreciate that. Hope you are too. The trade desk. Yo, the trade desk fell on some bad news. So first off, I kind of expected this to happen. It might be worth looking into at this price. But yeah, the trade desk, after having this insane gap down, is down another 12% today. There's no specific news except for the fact that Amazon. So here's what just happened. Netflix used to use the trade desk to find advertisers. Netflix came out with a new ad tier subscription where you pay less and you see ads on the site. But the trade desk, Amazon used to use the trade desk to find ads and advertisers. But now Netflix stopped using the trade desk and now uses Amazon. And so anyway, here's the thing. The trade desk has just lost their margins a bit too. Yeah, hey, Trent. Oh, Nevo, come on, man. Yeah, hey, we don't tolerate spam here. All right, so yeah, here's the revenue. The revenue is up 19% year over year, but check out the net income. The net income only grew by 6% year over year. So that means the margins have collapsed, or the margins fell by 10% year over year. Another thing that happened is they gave bad guidance. I wonder if there's any weekly news here. Nope, no news, but they gave bad guidance. I think this company's still worth looking into. This is a TV advertising company. They're still net income positive, making a bunch of net income every quarter. Um, Margins did fall a bit, but it's all right. I still like the trade desk, but it might sadly go lower because even after falling so much, they're still trading at 55 times net income. Yo, it still might fall further. That's the sad part for a company that's starting to show slowing, a high growth company, high multiple company that's starting to show signs of slowing growth, margins falling, losing their best customer. It's okay. Why is MicroStrategy not following Bitcoin? Maybe because they've diluted the stock. I don't know. I don't know specifically. But and there's also new like SEC rules around having new shareholder approval to issue stock for these Bitcoin mining companies like what's it, Bitmine and MicroStrategy. But here's Spotify. Man, I wish I bought Spotify stock instead of paying for their subscription every month because this company is at an all-time high pretty much. Congrats if you own Spotify. Check this out. We can see their monthly active users. It's 696 million, up from 626 million. So that's a lot of new users on Spotify, and their premium subscription is 90% of the revenue. It's up 22% year over year. Incredible growth. I mean, it just hits a record every year, every quarter. So how's the add to your business growing? That's up 9% year over year. Nice. So revenue's up 20. Net income went negative this quarter, but here's how we can see if this is a one-time adjustment. You go to the operating profit, we can see that this was some one-time adjustment. They didn't actually lose net income. They really made closer to 400 million in net income. So pretty cool. I love Spotify. They're expensive though. That valuation is expensive. What app are you using on the? Oh yeah, hey, this is my favorite app right here. It's actually a brokerage where you buy stocks on. It's in the link tree in my bio, the very first link there if you want to get it. Can you explain why U stock isn't doing well? I certainly can. So my guess says they should be doing well. Does GTA 6 come out, make it go up? I don't know. Yo, does anyone know the game called Rust? Rust is made with Unity, but one reason why Unity isn't doing too well, in my opinion, is because they're not growing and they're losing a bunch of money. So here's the unfortunate part. Check this out. When we go to Unity's revenue, it's actually down year over year. It's down 2% after falling 15%. So the growth is negative, and on top of that, they're burning through a lot of money. They're losing over 100 million of net income a quarter. So that's why I think investors aren't too happy with Unity because they're burning through money and the revenue sales growth is negative. I know they just like a year ago got a new CEO after the old one like changes the subscription model and how it works. But yeah, I'd be very careful with that one. I wouldn't have it as a huge position. I actually used to own them. So hey, I like the profile picture, Jen. Thanks. So Ahmed, what's up? He said CRDO. That's Credo Technologies. This is a stock that absolutely deserves to be at all-time highs. And usually if you look at a stock's financials, it explains why a stock is either at an all-time high or an all-time low, like Lucid is. So this is the impressive part about CRDO. The sales went from 59 mil to 223 million, over 3x increase. And also not just revenues growing, but net income. This is, they used to lose net income every quarter a year ago. Out of nowhere, it just popped up to 63 million this quarter, 40 mil last quarter. And like at this growth rate, what's the net income going to be at this time next year? So that's why they traded a high valuation. They're going to continue this growth. And they also have an absolute monster of a balance sheet. Let's see how much cash they got. 500 mil of cash, no debt on the books. That gives them tremendous freedom, huge safety net. So I can totally understand why this stock's at an all-time high today. Man, I've been looking at that one. I've been wanting to buy them, but could never pay the valuation. Hey, what up, Happy? He said, what is ARIS mining? Hey, AJ Thompson, if you give me a ticker symbol, I will check that stock out for you. So what do you think of the current price of Tesla? Ooh, Maddie, remind me to look at Meta. I'd love to look at Meta. Oh, yeah, Synopsys got clapped today. That was unfortunate to see. Bad guidance. So here's Tesla. If we judge this company based off their financials, I don't have much good to say. There is some good news though, like Tesla. Yeah, he gets a $1 trillion. He'll be worth $1 trillion, Elon Musk, if he can grow the company to $7 trillion market cap. So the stock has to basically 7x from here, and he'll be worth a bunch. But here's what's tough about Tesla, in my opinion, and here's why I just don't buy this stock, especially at this price. But again, it's super momentum-y, but they're trading at a 208 PE, which means they're trading at 200 times net income. It's okay to have a high valuation and a high PE as long as you're super growthy, like Palantir, like Credo Technologies we just looked at. But here's the thing with Tesla. Their total vehicles delivered are actually down 14% year over year. And we can just see that 88% of Tesla's revenue is their automotive business, and it's down 12% year over year. And their energy segment as well is down 7% year over year. So both segments are negative year over year. We can just see that in the total sales. You know, a super high premium company and the sales are down 12%. But I get the argument that, like, hey, you're really paying for the future growth in the future. Like, they're going to be a robotics company, they're going to be in autonomous driving stuff. But I just judging off financials, I just can't pay that valuation. The margins also collapsed. They actually had a little funny money adjustment to their net income, a little gap net income trick. They didn't actually make 1.2 billion in net income. They really made 800 million in net income. So the margins are actually closer to a 3% net margins, not great. So I think it's just tough, in my opinion, to pay. But that's a huge momentum company where the future growth is huge potentially. Hey, what up, Mushy? Good to see you, man. So yeah, it's interesting to see what he'll do. If he can get it to 7 trill, that'd be crazy to see. ARIS, I think. Let's do it. Yeah. Aris. Wait, oh, this is a Canadian company. So Aris Mining. Wow. They are at an all-time high. So, yo, congrats if you own this stock right here. It looks like an IREN. Wait, whoa. So the revenue is, where's the revenue come from? So that's the country they're in. So do beware. Segovia. Is that a place in in Canada? Yeah, I'm pretty. Where are they headquartered? Their country. Okay, Canada, Vancouver. Anyway, let's see what the sales are. So incredible growth. I can see why this stock's at all-time highs pretty much. The sales are up 73. Sales are up 73. They did, actually says they lost net income. They didn't actually lose net income. It was a little gap trick. Or they had some little one-time adjustment, but they really made around 50 million of after-tax net income. So I can see why they're at all-time highs. And some investors might be confused. If you just look at the net income, you'd be like, they're not doing too great on their net income. But yeah. Hey, Omar. Hey, don't spam here, man. All right. So yeah, QBTS, qubits, that's not a great quantum stock. Insane multiple. Hey, Tombstone said, what platform are you using? Yeah, hey, again, if you want to get this, it's actually a brokerage where you buy stocks on. It's my favorite one, lowest fee, most useful one. It's in the link tree in my bio. It's the very first link there. It's my favorite one. Link tree in bio, first link. It's an affiliate link, full disclosure. So let's see here. Why did CoreWeave go up 16% today? Probably just because the whole industry is. Probably because of Oracle. The whole Oracle today sent up the whole AI ecosystem. It sent up NVIDIA because check this out. Here's the thing. Oracle's opening up 37 new data centers, and they're primarily buying NVIDIA chips. And that helps out the whole ecosystem. That helps out CoreWeave. That helps out the nuclear companies like Constellation Energy. That's why they're up 6.5% today. And CoreWeave as well. Yeah, they're up 15% today. So yeah, CoreWeave is doing great. One thing I really liked about CoreWeave is how growthy the sales are. So check this out. The sales, are up 3x year over year. Insane. Went from 400 mil to 1.2 billion. And the revenue is expected to continue to climb up. This was a record this quarter, 1.2 bill. It's expected to go to 1.8 billion in 2 quarters. So one thing watch on CoreWeave, though, are these net income losses. They do lose a couple hundred mil of net income a quarter, but for the most part, I like the growth on CoreWeave. Don't you think Waymo is dominating self-driving cars? Yo, Joe, I absolutely agree with that. Waymo is dominating. And I love that because, I own Waymo. Google owns Waymo, and I got some Google stock. Looks like the market is rotating red right now. Wow, look at that. Slow bleeding on the Qs. We're at a new intraday low right now, so don't check your portfolio. Yeah, Tesla just dipped a bit. So I wonder what happened. Maybe there was some news that dropped. Yeah, Apple's down on the day. Anywho, can you please check out Checkpoint? versus Palo Alto. Yo, I know Checkpoint. I don't know their ticker symbol, but I do know Palo Alto Network's ticker symbol. And that's actually a company owned by Nancy Pelosi. These super investors, by SEC law have to, make all their trades public, and you can see their exact portfolio and weightings. And this is a huge cybersecurity company. This is actually my favorite cybersecurity company. And I've looked at Checkpoint before. If I had to pick one, I'd pick this stock right here. And hey, Bob, thanks so much, Bob, for the ice cream cone. I just saw that. I really appreciate you, Bob. But yeah, here's Palo Alto Network. It's a huge cybersecurity stock. And check this out. They're a huge subscription model company. I love subscription model companies because it's all reoccurring. And if you're buying a growth company, you really want to see, the revenue continue to grow, and the annual growth rate of the sales are absolutely nuts. And up 16% after going 22, after growing 30. So very steady growth on Palo Alto Network subscription revenue. Then they have the product revenue that just hits a new record every year as well. So they're just super growthy, making a couple $100 million net income every quarter, making billions of free cash flow a year, 3-4 bill plus. So PA&W is my favorite cybersecurity play. Nancy Pelosi approved, I guess you could say too. CrowdStrike's a close second. CrowdStrike's another one I really like. But they're still seeing some net income losses from the outage. What app are you using? Yeah, hey, Silverwolf. Yeah, hey, again, this is a brokerage where you buy stocks on. It's my favorite app. It's in the link tree in my bio, the very first link there. Waymos are everywhere where I live. Hey, that's pretty cool. Has anyone seen the Amazon Zooxes? If you live in Vegas, you've probably seen them. The Zooxes are everywhere in Vegas. They're like a competitor. And the Waymos are. Waymos are everywhere in Vegas. And now the Amazon Zoox. Okay. So can you check out FTNT? Oh, here's another great cybersecurity subscription model company that's finally at a good price to buy if you're looking to get into cybersecurity, the industry. I think that's one we're always going to need. I think that's the better software to be in. Like Salesforce is getting a bit hurt, Adobe's getting hurt, but really cybersecurity is like, if AI improves, the need for cybersecurity improves. So check this out. Here's their security subscription. It's 40% of the business. This one as well. It just hits a record every year, every quarter. That's what you love to see. And Fortinet as well is another company printing money. They're actually making a bit more than Palo Alto Network. They're making $400 to $500 million net income a quarter. These year-over-year growth rates are great. Sales are up 13. Net income's up 15. So yeah, they beat on the most recent quarter. I wonder why they fell. Maybe there was some bad guidance. Yeah. Jumbo, maybe we should look into the Checkpoint invented firewall. Hey, really? That's interesting. Checkpoint. What's the ticker symbol? If you want, I can check it out. Angelic, what's up? He said AMD or Palantir. Let's do AMD. We looked at Palantir not too long ago, and I have not looked at AMD yet on the stream, and I do own this company, so full disclosure, I might be biased when I go over them. Actually, let me show you my position in them really quickly. We're up 26% on AMD, so they're actually one of our larger holdings in here. So here's the thing with AMD. Obviously, we know they have a huge GPU market share. A 17% PC GPU market share, which is pretty crazy. That's led to the growth of their client and gaming business, up 69% year over year. But a really good growth driver for AMD has actually been the data center business. Data centers need GPUs, and AMD makes their own GPUs, and they can supply it to their own data centers, the newest models, the quickest, the cheapest, the fastest. It's great. Yo, hey, thanks so much for the paper crane. Yo, thank you so much, Justy. I really do appreciate that. Hope you're having a great day. I do appreciate that. But check this out on AMD. The free cash flow rocketed up 4x to $1.7 billion. Net income was $900 million. They have a fortress balance sheet. I mean, look at that. And the cash flow is great as well. So everything about AMD is headed in the right direction. The growth is finally back. Revenue is expected to continue to climb up these next 2 quarters. So I'm loving AMD. Thanks again, Justy. I do really appreciate that gift there. So what's this app called? Yeah, hey, Luca. It's actually a software game where you buy stocks on. It's in the link tree in my bio, the very first link there. All right, so blood on the streets, so red, it's scary. Yeah. DJIA. What's this one? DJIA. This is the Global X Dow 30 covered call ETFs. So, these are these covered call ETFs. So basically they sell calls, or this one sells calls on the Dow. They never actually outperform the underlying asset. So that's why this stock is the same price that it was back in 2022. But you buy this to maximize your dividend income because you get a 12% yield and it pays monthly. So yeah, you're basically buying it to maximize your dividend income. But again, the S&P 500 is at an all-time high today, and this one's nowhere near all-time highs. So you're sacrificing the growth for the dividend. So yeah. All right, let's see here. Oh, thoughts on SoFi. Yo, I love SoFi, and I regret every share I've ever sold of this stock. I'll show you my position as well because I barely have any shares left. So yeah, I have 24 shares left. I bought SoFi, man. Check this out. I think it'll show the buy orders. I bought it way, way, way back here. I bought all my SoFi on this day, and I've just been holding them since for many years. Absolute diamond handing this stock. I took a little bit of profits, but here's the thing with SoFi. They beat even my expectations. I sold them at like a 200% profit because I didn't think they'd continue the growth, but they've even beat my expectations and all the analysts' expectations. Check out the financial services revenue. It is up 105% year over year after growing 80%, after growing 222%. I mean, that's why they deserve a high premium, a high valuation, because they're high growth. So the revenue's at a new record, or their financial services are at a new record. That's now 42% of the revenue. Actually, if we scroll back to like 2023, the financial services were only 20% of the revenue. So it's now a huge segment of the revenue. And of course, the lending business is at a new record as well, up 30% year over year. How about this business? Their technology platform also at a record 15%. So every business is doing great. People are just really starting to take SoFi serious. They're super growthy. The sales are up 42%. They made 850 mil of revenue. And out of this 850 mil of revenue, they nearly made 100 million of after-tax net income. That's why SoFi is at $25 plus. They deserve it. I wouldn't, buy a meaningful amount at this price. They are pretty expensive, but I'm so glad I own them. I regret every share I've ever sold them. So yeah. Software is this? Yeah, hey, what up, THI? Again, it's in the link tree in my bio, the very first link there. It's a brokerage where you buy stocks on first link. So yeah, what is this? SoFi is my main investment platform. There's a reason the stock exploded. Hey, thanks, Looney. I'll give the credit to you, my friend. Super Micro, please. You know what? We'll pull up Super Micro. I actually don't recommend buying this stock. Aren't they having a decent day? Well, kind of. Well, they had a great day yesterday, but I wouldn't really touch this one over $40 or really over like 38. I wouldn't be shocked to see this company go lower. I do own this one. So I do have exposure. I have like 10 shares. But here's the thing. Here's why I'm a little concerned. So the revenue grew. This is great news. The revenue's up 7.5, but the profits, the net income is actually down by 35%. That means the margins are collapsing. They only have a 3.4% net margins. Again, they just sell a commodity. They do the server rack installation, but they're giving customers bulk deals, and that's why the margins are collapsing. So I'm being careful. I'm already up a good chunk on them. So me specifically, I wouldn't really touch this one over $35. Where's my Super Micro? Here it is. Yeah, I got 10 shares. I'm up 66% on them. I bought them during their whole accounting fraud issues where they were supposed to report earnings this day. They legit were supposed to report earnings and they just didn't. And the stock collapsed. I remember watching it live. And then I bought in a little while after. And now I've just been holding on to my shares. So yeah, I'm not too enthusiastic about buying that one at this price. Ooh, Meta. Yo, thanks for reminding me. I wanted to go over Meta again. This is another fantastic buy and never sell Mag 7 stock with incredible margins. Everyone's on Meta, either like Facebook, Instagram. The Threads app. The Threads app, if anyone's heard of that, is now nearing the same amount of daily active users as X is. Pretty insane. But check this out. They have, let's hope this is the numbers Meta give. We do suspect some of this might be AI bots because, again, China, which is a huge chunk of the world's population, you can't get Meta platforms there. So they're saying like 60% of the world ex-China is on a Meta platform once a day. They have 3.48 billion daily active users. Pretty nuts. And, well, they're also printing net income. That's how I can believe it, because these net income numbers are ridiculous. It's up 36% year over year. Revenue's up 20. Net income's up 30. So they're growing their margins. They have like 80 billion of cash on hand earning interest. Yeah, there's Mark Zuck. Mark Zuck owns 14% of all the shares. Meta also has a nice dividend. Well, nice dividend growth. It has a 0.3% on the metaverse. Yeah. Hey, yeah, they here's the good thing. They shifted their focus from the metaverse to AI. They're kind of behind in AI, not gonna lie. But it's really the ad business that's making them a bunch of money. And the growth of they're also introducing ads to WhatsApp. That's going to be an earnings tailwind. Would be pretty cool. Okay, look at Cloudflare. Yeah, hey, let's look at Cloudflare. They're another cybersecurity stock. The thing is, they legit secure their like data in lava lamps, like real store bought lava lamps. I kid you not, because it makes it random. It's pretty interesting. But Cloudflare is legit at an all-time high today. Congrats if you own this company. They're a huge cybersecurity stock, and the sales just hit a record every quarter. I mean, look at these year-over-year growth rates in the middle. I mean, the revenue just continues to grow. It's ridiculous. They are still struggling with net income, but most of these net income losses are because they just bought a company. And here's how you can tell. If you go to the cash from investing activities, if this is negative, that means they're investing. That means they bought a company, they bought land, they bought equipment like a truck or something, and they invested 800 million, and that's how their balance sheet assets just spiked up a good chunk. But yeah, they bought a business that should bring even more growth to the revenue. I just love Cloudflare as a cybersecurity company. They never sell stock. No competition. Ooh, what stock was Oliver talking about? Um, uh, oh yeah, Cloudflare. Yeah, Cloudflare is great. Yeah, Cloudflare is great. Okay, thoughts on I don't know what that is. Hey, Tom, if you give me a ticker symbol, I'll check it out for you. Hey, what's up, Edo? He said CPS stock. So this is Cooper Standard. Let's check it out. They have been rallying like crazy the past couple months here. They're in sealing systems. So that business is down by 0.1% year over year. And then they have the fluid handling systems, which is down by 0.1. So yeah, when we combine that, the revenue's down by 0.34% year over year. But they are improving their margins. That is good. But when we zoom out, that paints a better picture. But maybe this is a super interest rate sensitive stock. I don't know, because they have more liabilities than assets. The sales aren't growing. They're making net income every quarter, which is good. But what does this company do? Auto parts, yeah, sealing and fluid handling systems. That sounds niche. I don't know. They're doing really good. I wonder why. Hey, Plasma, good to see you, brother. Let's see. GTLB back to pre-earnings price. Hey, nice. GitLab. Yeah, this company, I remember watching earnings live with you. The stock fell like 20%, and now it's recovered the whole thing. So nice if you bought the dip on that stock. So let's see. How did they do on earnings again? So they beat on revenue, they beat on net income, and they beat on EBITDA. So it was a triple beat quarter. Maybe that's why the stock is recovering from its losses, because they beat on expectations. Yusuf said what app is this? Yeah, hey, this is a brokerage where you buy stocks on. If you want to get this brokerage, it's in the link tree in my bio, the very first link there. It's my favorite app. It's called Moomoo. You can just type it into Google. But yeah, if you want to use my affiliate link tree in bio. What thoughts on what will happen with the CPI report tomorrow? Yeah, so inflation, we're going to be heavily watching that, because this inflation report we're going to get tomorrow probably will impact if we're going to get a 25 basis point or a 50 basis point cut in the next meeting. So yeah, that'll be tomorrow morning. So don't be surprised if the market is either up or down a bunch tomorrow. I'd love to see a super green day tomorrow. So yeah. Oh yeah, CoreWeave was up a good chunk today. Wait, Dat Cred said, can you check out Qubits? What do you think of these quantum plays? So I actually don't like any of the quantum names. QBTS, RGTI, D-Wave. Oh wait, there's this other. They're all not worth their market cap. If you look in the top right here, this is a pure momentum company right now, but I don't think this one's worth owning. Like just buying and holding shares of, in my opinion, is not worth it. They're a $5 billion company. Yeah, quantum computing system sales. How's the quantum computing revenue? Well, it's down 30% year over year. What are the total sales? So the sales are 3 million this quarter. Again, $5.5 billion company, 3 million of sales. They lost 167 million in net income just in the past 3 months. So again, they are beefing up their balance sheet though. That's the good news. That's the smart thing they're doing. If you're wondering, how did their cash go from 40 million a year ago to 820 million of cash? Well, if we go to the cash and financing activities, again, if this is positive, this means they're diluting you. They either just issued 530 million of debt or issued 530 million of stock and diluted you. And it's smart for them to dilute you at this price because they know it's overvalued, and they beefed up their balance sheet. So we know it's not debt because the liabilities stayed the same. Pretty interesting. Maybe they're going to turn into like a GameStop or a MicroStrategy where they issue shares and buy a bunch of Bitcoin or something. Or they can just keep it in cash and earn interest on it. Brother, are you looking to buy into any companies? I still see the 1K cash. Yeah, dude, I haven't seen any valuations. Like a lot of valuations are tough to pay right now. What happens is, yeah, hey, Boo Boo, again, it's actually, you buy stocks on here, it's a software. If you want to get it, it's in the link tree in my bio, the very first link there, my favorite one, lowest fee brokerage, most useful one too. So let's see, thoughts on, SoundHound AI. I know this is a kind of momentum-y company. NVIDIA used to own this stock actually, but if you own SoundHound AI, there's one thing you want to watch if you're a shareholder, and that's their subscription revenue, because this has led to all the stock price appreciation. Legit a year ago, this was a nothing burger business, 400,000 a quarter, but now it's 32 million. That's an 8x increase from the previous year after it 8x'd. So at this growth rate, 32 million this quarter, 8xing, what's it going to be the same time next year? That was a huge beat on the analyst expectations. They were expecting 32. They reported 42 million. But one thing, they're down 6% today. Here's why. And here's what a lot of these companies are doing right now. They just diluted the shareholder by $60 million. And let's see if they've been doing that. So yeah, they did that 2 quarters ago. They issued another 60 million that quarter, 100 million of stock. So, because if we go to their net income right here, they are still losing net income every quarter. Do beware. Yeah, they're losing 50 million in net income a quarter, so they do got to afford that. But the sales growth is crazy. Went from 13 to 42. So you're watching that subscription revenue. Hey, appreciate that, Dat Cred. I appreciate you, man. I think quantum will be next big for AI. Exactly. And I do have quantum exposure, but it's not through you think. I actually have exposure to quantum via Google stock. Google's already, in my opinion, the #1 industry leader in quantum, and Google has the money and the talent to continue to be the industry leader. So yeah. Yeah, hey, again, if you want to get this app I'm on, it's a brokerage where you buy stocks on. So it's in the link tree in my bio, the very first link there, or you can just it's an affiliate link, so you don't have to use it. You can just go into Google and type in Moomoo. It's my favorite brokerage to use. It's where you buy stocks. So you got to fill out a bunch of stuff. But yeah, it's my favorite brokerage right here. Linktree and bio first link. You got to put in like your SSN and stuff. FDIC insured brokerage. Hey, this brokerage I'm on, they're also publicly traded. Ticker symbol FUTU. The stock is done insanely well. Yeah, this app I'm on is called Moomoo. Here's the stock in the top left. It's called Moomoo. And again, even if this company went bankrupt, you'd still be FDIC insured for 250K, but they're printing money. There's no chance of bankruptcy. They made 330 mil this quarter. 111% increase. This company has insane margins, 50% margins. So anyway, yeah, that's this app publicly, that's their stock. Oh, and I keep my cash in here. That's another useful thing. Like I know people, they just like use this app just for the cash interest. Like if you just keep your cash in here, your idle cash, you get a 4.10% APY and it earns daily interest. So that's where I keep my cash. So yeah, my 1K earns me 11 cents a day. So let's see. Hey, thanks again, Justy, for stopping by the live. Yeah, if you want to hit the follow button, we go live every single day, by the way. So yeah. I'm also streaming on YouTube. If you missed anything, you can replay it on YouTube. My YouTube channel is called Nathan Robert, Linktree in bio. But yeah, let's keep going here. The Honest Company. Here's another very small stock. I'm up on Futu. Hey, that's great, Looney. Me too. Futu is the next Robinhood, in my opinion. So anyway, here's the Honest Company. People keep asking, yeah, hey, Andres, again, if you want to get this app I'm on, it's a brokerage. It's in the link tree in my bio, the very first link there. Thank you. I should have a pinned comment saying that. I apologize. Someone asks every couple of minutes. So anyway, here's the Honest Company. Here's the thing I think investors are a little disappointed about and why the stock has kind of been trending down. Remember, they're a very small one, a $420 million company, but they're a $400 million market cap. And check this out right here. The sales are only up by 0.4% year over year. So that's not great growth. It doesn't really beat inflation. So sales are up by 0.4, but good news, they're still making net income, or they're starting to make net income. 4 mil this quarter, 3 mil last quarter. I believe they have no net debt. They have like 60 million of net cash, but I'm just not, I just, they just sell a commodity. Again, they just sell diapers and wipes. Diapers and wipes are 90, or no, it's 70% of all the sales. Actually, I used to break it down over here. Wonder if I can scroll out and see that. How far do I have to go? Yeah, then they glitched it. Yeah, diapers and wipes, 65% of the sales, skin and personal care. So anyway, oh, hey, what up, Sure86? He said BBAI. You know what? I did see your comment. I actually would not touch this company right here. It's another just momentum name with not any good fund. Like, not trying to bag on your stock, because the math is the math. If I judge this company off their financials, it's not a good company in my opinion. And I'll just show you the numbers for yourself and you can draw your own conclusion. They're all momentum, I think. But look at this market cap. They're a $1.7 billion company. So remember that market cap, $1.7 billion company, and they lost $230 million of net income just this quarter. That's well over 10% of their entire market cap just this quarter. Not to mention last quarter was 70 mil and the quarter before was 150 mil. They're losing net income every quarter. And, they're losing all this net income all for a business that declined by 18% year over year. So that's the thing with BBAI that scares me, or the lifeblood of the company. The revenue's down 19. It lost 230 mil and the whole company is worth 1.7. So be very careful with that one. Just from a numbers point of view. I don't even know what they do, but I don't like the decline of the sales. All right, so PL, is that ticker PL? PL stock. All right, so this is Planet Labs. Wow, this company has done very well, almost back to their IPO price. I wonder what they do. Let's go find out. So Planet Labs, web-to-go platform with satellite data. So they're in the aerospace and defense industry. Pretty interesting. And the sales are up 20% year over year. That's good. Double-digit growth. Sales are up 20 after going 14. They're not making any net income. They're still losing net income every quarter. But this industry is pretty interesting. And actually, this is probably why the stock is, wow, that explains it. So if we go to why the stock gapped up right here, this was on earnings. So they reported earnings, and here's what analysts were expecting. 66 million of revenue, and they reported 73. Huge beat on the revenue. So that's why the stock gapped up. They're beating on analyst expectations. How do you analyze an IPO? You can't really, because there's not any financial data to really look at on an IPO. Not much history. So yeah, Reddit is the next Meta. Kinda, yeah. Reddit is printing money. Their average revenue per user is up 48% year over year. The stock's at an all-time high, up 9%. They legit have, it costs nothing to run Reddit. Like, they have 90% gross margins. They have no debt at all. $2 billion of cash. It's making them over 10 million of interest a quarter. They're finally super net income positive. The sales, the growth, the revenue is up 77%. I mean, Reddit is a beast. I do own them, so I might be biased. Hey, what up, George? He said, don't ignore me. Hey, I didn't mean to ignore you. He said, LAES, sorry. If I don't get to your stock, I do apologize. I try and get to all of them. And by the way, if you have a stock you desperately want me to look at, you go to I'm streaming on YouTube as well. If you type it in the YouTube chat, I always do every stock in there no matter what. So if you got a stock you desperately want me to look at, comment it on my YouTube stream. I'm streaming on YouTube as well. My YouTube channel is just called, you can type it into YouTube, Nathan Robert. My YouTube channel is also in the link tree in my bio. But anyway, here's a $330 million company. And that's the best way to support me. TikTok sometimes takes down my stream. If you're watching my stream and it sometimes just goes blank out of nowhere, ends out of nowhere, most likely TikTok took it down. So anyway, here's Seal SQ. This is a $363 million company. They're a semiconductor stock. Okay, so they're in semiconductors. Do they have sales though? So here's the kind of the bad news. So for the full year 2024, the sales were 10 million, a 63% decline from the previous year. And they lost 21 million net income. This is from 2024 Q2. This isn't even like recent data. I don't think they give that out. Yeah, that's weird. I don't know. I think this is, they're really small market cap. I'd be very careful with LAES. Sorry, that probably wasn't too helpful. I do apologize. Random question, but gym stocks peak every January because everyone signs up with the New Year's resolution. Hey, it's an interesting theory. That's thinking outside the box. PLNT is a Planet Fitness. Planet Fitness, their whole, even if you pay for the subscription every month, even if you don't go to the gym, they're making that nice income. And yeah, they also get the franchise revenue. So yeah, the Planet Fitness specifically, a percent of every single Lifetime Fitness franchise sales, like a percent of it goes back to this company as a royalty. So they have this franchise revenue that's very high margin. So yeah, that's why this seems abnormally high. How does a gym have 53% gross margins? It's because part of their revenue streams are royalties, 17% net margin. Check that out. Planet Fitness net income up 18% year over year. They're doing share buybacks. Also, these assets are understated. They're kind of like McDonald's. The assets are understated because they're intangible. It's that royalty revenue. So they actually have a very strong balance sheet. They're even doing share buybacks. Let me actually verify. Wow. Okay, look, the net income is up 18, but the net income per share is up 23. Dude, they've bought back like 6 to 7% of all the shares. I'm going to re-add them to the top of my watch list. If for some reason this boring gym stock has good financials, but I don't really expect that one to outperform the market in the long run. All right, so AMAT, Applied Materials. This is like a value semi play. Let's see. What's their multiple again? Yeah, 19 times net income. That's very like fair for the industry and like compared to like an ASML or something. So I feel like this one could maybe stretch up to like a 22 times PE. But the reason they're trading at this teen multiple, 19 times net income, is because the growth isn't like NVIDIA and AMD. It's single-digit sales growth. The sales are up 7.7% year over year. The net income actually is only up 4.34%, so the margins actually did dip a little bit, but still they're printing money. 1 to 2.5 billion of net income a quarter. You get an over 1% dividend yield, very safe payout ratio. Like they have so much room to raise their dividends. So Applied Materials is pretty cool. Nice multiple as well. So anyway, that's AMAT. Nice, should be a nice dividend growth stock. Why is GLWPE so high? Let me find out. Oh, I think it's because if we go to their net income right here. Yeah. So you see this quarter right here where it says, or actually we can just go to EPS. You see how it says they lost 14 cents of EPS this quarter? Well, they didn't actually. They really made around 30 cents of EPS. So basically, their net income multiple, the PE, is artificially suppressed because of this one quarter where they should have made 30 cents of EPS. So that's why you got to look at a forward net income multiple. So you really should do about $2.30 of EPS. So here's what you do. Do 74 divided by 2.3, and that's your multiple. You know what I'll do for you? 74 divided by 2.3. They're trading at 32 times forward net income in my little quick analysis. Okay, should I buy the Gemini IPO? Okay, so this is that crypto exchange. They're going to be at a market cap of just around $3 billion. So again, they're a very small company, a $3 billion market cap. But what we've seen recently is as soon as a company IPOs, it like rockets up. Klarna was up 17% earlier. Yeah, Klarna's up 17% right now. So pretty cool. Thank you. Math wasn't. No. Hey, all good. Celebrate said PDEX. All right. We'll look at one. Yo, if anyone's in the YouTube chat, I'll look at one or two more stocks and then I'm ending the stream. I've been streaming for 2 hours now. I really appreciate y'all being here. By the way, if you want to hit the follow button, we stream every single day. I'd really appreciate that. I sell nothing, no course book. So anyway, here's PDEX, $115 million market cap. They sell medical devices, repairs. That's like a recurring business, right? Yeah, look at the repair revenue, how it's just gone up very nicely. So repair revenues, medical device revenues also at a record. So it just had a great most recent quarter. So the sales are up 16% and they are net income positive every quarter. So they're making net income every quarter. The margins did fall a little bit. So that might be why the stock fell, because that was a real margin hit. I'm not sure what happened there. Anyway, they seem pretty interesting. The medical device business is growing, and I like the repair. They should be like some reoccurring revenue. It was up to a record this quarter, so pretty cool. PDEX. Oh, Omar, what's up? He said GameStop. Let's see. GME. This is really a company you want to value based off its like off its cash. So remember this number, an $11 billion market cap. So the whole company of GameStop is worth $11 billion. And check this out. They actually have nearly 8 $8.7 billion of cash. So, 75% of the entire market cap, 75% of what you're paying with this company is legit just GameStop's cash on hand. And since they have $8.6 billion of cash, let's go see how much interest they're making on their cash. You go to the income statement, and also they have no debt. So, no debt on the book. So here's how much they made. I kid you not. That's the power of having a lot of cash. They made 79 million of interest, like pure interest that's straight to the bottom line. 79 million of interest. That's how they actually stayed net income positive for a lot of the time. But yeah, GameStop, not a good one fundamentally, but yeah, you're really buying them for their cash pile. Every time also, let me show you. How did GameStop get $9 billion of cash, you're asking? How did that happen? Well, every time GameStop stock goes up, they dilute you by a lot. So they actually issued this is, again, 25% of the entire company, because it's only an $11 billion company. They diluted you by they issued $2.7 billion worth of stock this quarter. Last quarter, $1.5 billion. So that's how they fortify their balance sheet. Hey, Clem, thanks for showing up to the YouTube stream. He said Snapchat, final stock here. Let's do it. So, Snapchat, this stock, unfortunately, is pretty much at an all-time low. So let's see why. Here's their active users. This is a cool metric we get. Their daily active users are 469 million. Same time last year, it was 432 mil. So a nice little increase. But here's the bad news. Snapchat just can't catch a break. They can't get net income positive. Like, just for the longest time, literally for many, many years since they IPO'd, they just lose hundreds of millions of dollars a quarter. And we thought the trend was getting better, but then they lost 262 mil this quarter. Revenue's up 8%. So I wouldn't buy Snapchat. I don't know. The risk reward might be decent here, but those net income losses just scare me, and I just stay away from them. But anyway, thank you all very much for being here. If you want to hit the follow button, we go live every day. The very number one way to support me, the best way to support me is subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. I'm also streaming on there, so if you missed anything, you can replay it. A lot of people like to watch the beginning of the streams. You can see my whole portfolio. Yeah, we're at a new all-time high today. Actually, we might not be at all-time high still. Let me see. Ooh, look at that. So we're almost negative on the day. How's the Qs doing? Yeah, the Qs as well. The Qs just went negative. So anyway, yeah, best way to support me, check out my YouTube channel, follow it. It's called Nathan Robert. I'm trying to build up my stream, or trying to build up my following on there, because I don't get many views on YouTube versus I do on TikTok. So yeah, thank you for being here. Have a great rest of your day. Oh, and if you want to get this app I'm on, it's my favorite one, lowest fee brokerage, most useful analysis software. It's in the link tree in my bio, the very first link there. See you later, friends. Have a great rest of your day. Hey, thank you, Looney, John, Clem. Thank you, guys. See you later. We'll be live